Good morning, Vietnam. This is not a test. This is rock and roll, rocking it all the way from the Delta to the DMZ here live on the Phoenix National Network. My name is Richard Ciuzio. I am a loan officer with Hudson United Mortgage. I am licensed in New York, New Jersey, Connecticut, and Florida. So that's the tri-state plus Florida. And I want to welcome you and thank you for tuning in for those of you who are watching. Today's segment, I'm going to be talking about why good credit is beneficial to your mortgage health or any loan health, so to speak. So if you have any questions, and if you're watching on our apps, which you can download, Phoenix National Network on your iPhone or from your Android on the Play Store. Feel free if you're watching on our Facebook page or YouTube or the PNG website itself, please drop some questions if you have anything. Our moderator, Mr. Phil Reed, thank you, will relay them to me, and I'll be more than happy to answer any questions anybody has after my segment is over. That being said, if you need to get a hold of me, my services are free of charge until you don't have to pay me anything. When I close the loan, the bank pays me. That's how that is done. So any free consultation or pre-approval that you may want, please give me a call. You can reach me on my cell phone number at area code 321-634-2552, or you can shoot me an email. I'm very responsive at richard.cusio@hudsonunited.com. So today, a little bit about why a better credit score is good for your mortgage health. Society is becoming increasingly dependent on credit to make purchases and financial decisions. And a good credit score is used for more than just getting a credit card or a mortgage loan. Credit scores, what they do is they demonstrate your history of paying your debts to the entities or businesses that loan you this money. So, and when there are a lot of times that, due to extending themselves beyond their means, which means you're going over your credit limit, or you're going over your threshold, or you're incurring so much debt on your credit cards, many people aren't able to pay back their debts. And as a result, this impacts your credit score in a negatively. So at the same time, general living expenses take a toll on people's paychecks as well, because now you're barely making ends meet because you've got so much other debt accrued on your revolving or installment debt, and you're still trying to pay your mortgage, your utilities, your cell phone bills, your living expenses. So businesses must have a very good reason to insist, or businesses have a very good reason to insist that you have good credit before providing services or products based on credit. Some employers even run credit checks to see if you could be trusted with the company finances or assets. Banks are huge on this. A lot of banks. When I used to work for the bank that I worked at before I came to Hudson, I needed a minimum of I think it was like 680 credit score in order to get even be considered for the job. People have been turned down. I passed, obviously, but people have been turned down for types of roles like this, banker or teller or whatever it may be, and because they have low credit. So, if you have a history of not being financially responsible, you may also run into problems finding work, but you're definitely going to run into problems getting any type of loan or mortgage, or any type of credit card, whatever it may be. So credit can affect where you live. Before you buy a house, any banking institutions, mortgage lenders, mortgage brokers, we want to know that you're not going to default on your mortgage. We want a good credit standing. So if you don't have good credit, the lender is going to consider it risky to give you a mortgage loan. There are going to be high risk factors involved. If you're approved for a mortgage, your credit affects your interest rate. So interest rates are directly impact your monthly payment, either by increasing or by decreasing the amount you're charged. A lower credit score, you're probably going to have to pay a higher credit. You're definitely going to have to pay a higher interest rate. A lower credit score, you get to, you're either going to get the best rate available or pay a lower rate. And the pricing is going to be significantly better for these rates as well. Low credit scores make it much more difficult to find a lender who is willing to lend on this bad credit. Or perhaps you can get approved at a higher than normal market rate and positively even have to pay points. Do we have lenders that, look, do we have lenders that are going to lend with you with bad credit? Yes, we do. Absolutely. However, even they have, their floor cap as well. I haven't worked with anybody who has had lower than a 500 on their credit score. However, we do have a lender. Now, the rate is not favorable and you are going to pay points, but it doesn't mean that the products are not out there. It just makes it a lot more difficult to find a lender who's going to lend with bad credit. So believe it or not, like I was saying, lenders do have guidelines on what the minimum FICO credit score requirement is that they have and will lend on a conventional or a government loan. A government loan like FHA or VA for your veterans. FHA is your Federal Housing Administration loan. Now, these requirements that these lenders have for the minimum, they vary from lender to lender and whether it's a conventional or a government loan. And they usually vary anywhere between 600 and 640. So that is, I would try to stay above, do not go any lower than 600. Try to get above 640, but definitely try to stay above 680 if you can. You got to build it up. The better the credit, the better your chances are of getting a loan and better interest rate as well. Average to fair credit is about 680. That's your average to fair credit score. Now, even though you may have average or fair credit, Fannie and Freddie, which are your guidelines for the mortgage industry, they have their own guidelines when it comes to actually structuring the loan and for us, the mortgage brokers, to get approval on your loan. Now, normally on a conventional loan, your front end DTI, or your debt to income ratio, which is all of your proposed housing expenses, it's your PITI. So it's your principal, it's your interest, it's your monthly taxes and your insurance on that future proposed property that you have. On a conventional loan, your DTI should stay on, we try to calculate it under a 46%. Now, however, I have seen it go as high as 49.99 on the front end. And this only happens when people have a strong credit rating, FICO over 720 or 730, with little or no debts and a good, strong credit history, no late payments. All their debts are either paid off or very minimum balance, and they've got good credit rating because of that. Why is this helpful? Because it allows you as a consumer to increase your proposed housing expenses a little bit. If you're capped at that 46%, what if you need an extra $50 in property taxes a month, or insurance, or flood insurance, or PMI, or maybe you do a higher interest rate or something like that to help you with the closing costs, which is a lender credit. Having that leeway, having that slack helps you with going up to that 49%. So these are the benefits of having a good credit score when it comes to doing your mortgage. Your back end DTI, or once again, your debt to income ratio, which is all of your other installment and revolving debts combined with your PITI, principal, interest, taxes, insurance, can go as high as 50% normally with a good credit rating above 680, 700. But when you have credit scores below 680, that's 679 and below, and a lot of debt, or not so good credit history, the guidelines and the overlays stray from the norm. And in order to get an approval, especially with small down payment these days, the DTI, the guidelines to get an approval reduce on a conventional loan from 50% to 45%. That's 5%. You're losing 5% on your slack in your ratio. And the same thing goes for an FHA. Normally, you can go as high as a 56% on the back end DTI ratio. However, under 680 and with a not so strong credit profile, these restrictions sometimes drop to 50%. So now you're losing 6% on a FHA loan. That's huge. That could be a couple $100. So you can survive with bad credit. It's not always easy, and it's definitely not cheap. Your interest rates go higher on your credit cards. You're probably going to be paying. I mean, most credit cards you're paying anywhere from 15 to 22%, depending on what credit card you have, and which is why we do a lot of cash out refinancing. A lot of people want to do a cash out refi and get rid of all that debt. They'd rather have a 3% interest rate on $10,000 than 20% on, or 16% on $10,000. I know I would. I've done debt consolidation before. I've done balance transfers and stuff like that and paid off my debt. Is it worth it? Yeah, but you got to be sure to pay it off. Establishing a good credit score is going to help you save money. It's going to help your. It's going to make your financial life and your mortgage health much easier. So if you're looking for reasons to maintain good credit, these are them. These are the benefits to having a good credit score: is being able to qualify for the house that you want, being able to get the better interest rate, which is going to save you an 8% on a $500,000 home. It's going to save you $100,000 in interest. So, or 1/4%, whatever it may be. Every loan is different, but it's going to save you thousands of dollars in the long run. The interest rate is one of the costs that you pay for borrowing your money, and often this interest rate is directly tied to your credit score. Okay. You'll almost always qualify for the best interest rate when you have a better credit score, and you'll pay lower financing charges on your credit card and balances as well. So the less money you pay in interest, the faster you're going to pay off your debt, and the more money you're going to have for your other expenses, or your kids' college tuition, or groceries, or that family vacation to Disney World, or Busch Gardens, or cruise, or somewhere outside the continental U.S. Borrower in retrospect, borrowers with a poor credit history typically avoid applying for new credit or loans because they've been turned down previously. So having an excellent credit score doesn't always guarantee approval, but lenders still consider other factors such as your income and debt. However, a good credit score increases your chances of being approved for new credit. So in other words, you can apply for a loan or credit card with confidence when you have a good credit score. You can also get approved for higher limits on your loan. Your borrowing capacity is based on your income, but it's also based on your credit score. So another benefit of having this credit score, a good or high credit score is that the banks are willing to let you borrow more money because you've demonstrated that you can pay back what you borrow on time and not make late payments, and you're paying it off on a month-to-month basis. You may still get approved for some loans with bad credit score, but the amount's going to be a little bit more limited or restricted. You might not qualify for that $350,000, $400,000 home. Maybe you're going to qualify for a $275,000 or $250,000 home because of these DTI restrictions and overlays that have been put in place ever since COVID, or just because of the credit score overlays as well. Not having those extra monthly expenses, they're going to allow you to get a higher priced home as long as your income is sufficient, or a home that is or for a home that is located in a higher tax area. So for instance, let's say you've got you got a car loan, you got a couple credit cards, and then you got your house, or you're trying to buy a house. Now, maybe, look, on most low credit card debt, sometimes your minimum payment is whatever the balance is left over. Maybe it's $25, maybe it's $38, maybe it's $50. But that $50 is going to, if it shows up on your credit report, that's a liability that you have. That's a monthly debt we have to indebt you for. So what if your DTI ratio is like right at the cusp? Maybe you're at like a 52% on a conventional loan, which is 2% over the limit. What can we do? Is there something we can pay off? Maybe you have like a $4,000 credit card balance, and your limit is $5,000. So that's more than 30% of your threshold. And when I say the 30% threshold, I mean 30% more than the allowed maximum limit on your credit card. So, on a $10,000 card, 30% is $3,000. So the longer you're above that 30% threshold, um, one, the longer your credit score is going to be impacted negatively. But two, your monthly payment's going to go up. Maybe that monthly payment's not 25 or $35 anymore. Maybe now it's 75. Maybe now it's 95. I've seen credit card payments for 100, and I've had credit card payments for 100 and some $78, $200 a pop, because I was spending money like crazy. That's a lot. $200 payment. You could use that money to add $200 to your monthly property taxes. In Valhalla and Yorktown Heights, Valhalla, you're looking at $18,000 in property taxes. You divide that by 12, that's $1,500 a month. Minus 200, now you can only qualify for a property that's $1,300, because your credit card payment, $1,300 a month, I should say, because your credit card payment is $200. Pay it off, now you get that $200 to play with. So there are, these are the benefits to not having any debt when you're applying for a loan and having good credit. And for those of you who aren't, buying just yet, it's also, you having good credit gets you easier approval. You get an easier approval for rentals or apartments. Landlords are using credit scores as part of their tenant screening process. Co-ops do this, condos do this. A bad credit score, especially if it's caused by an eviction or a foreclosure or bankruptcy, or outstanding rental balance, or debt loans and debts that have been put into collection because of non-payment, these can severely damage your chances of getting any type of loan, any type of apartment or rental. So a good credit score saves you the time and hassle of finding that landlord that is going to approve renters with damaged credit. It's also going to save you the time and hassle of trying to find somebody who will accept you. But, in the long run, having a good credit score is going to impact your mortgage wealth and your mortgage health. So if you have any questions, please let me know. I appreciate you taking the time to listen to the segment today. I'm going to open it up if Phil has any questions, or if anybody else. Thank you again. Mr. Phil, you there?
Yes, sir. Yes, sir.
Hey, what's
I'm
up?
here. I'm here. So I'm curious about a couple of things.
Nope.
One of- yeah, I mean, because you said a whole lot in your segment, but I just want to break this down in a sense.
Sure.
So as far as people that are, let's say you're like really working hard as far as getting your credit score uh up, or you have a great credit score, but or you have poor credit score but you have a great income, right? So you are making over six figures, but your credit score is like 640,
Hmm.
right? How does somebody what would be your advice to somebody that's like in that situation?
Well, my advice would be, when I run credit, we use a third party agency to run credit, whether it's I don't want to name any names, but we use a credit agency to run credit who works directly with the credit bureau.
Mm,
Every banking institution, mortgage company, mortgage broker, every lender uses their own credit running system, so to
right.
speak. LexisNexis, but they all, or something along those lines, that all report and get their data directly from Experian, TransUnion, and Equifax. Now, I learned recently that with the credit company we use, there's actually like a little tool that you can play around with these people's, not playing, you're playing with their credit, but what you're doing is you're playing with their scenario. All right. So when I open up my credit screen on the website from the credit where I pulled the credit from itself,
Mhm.
um, I see the trade lines. I see in one box you've got Experian, in another box you've got Equifax, and in the other box you got TransUnion. And then
Mhm.
inside that box, it tells you your score. But then there's a little box. It's a little blue box like this big,
Did the blue box.
and it has a some most times it has a little number with a plus symbol next to it,
Hmm.
which means, and then I look at that number. Okay, this reporting Equifax plus 20, that means I can do, there's something in here that we can do to boost your credit score up 20 points. Then the other one might be plus 38, then the other one might be plus 17. So what I can do is I can go into this field, and I can play around with, okay, what if we got a JP Morgan Chase card? What if we pay that down? What
Hmm.
happens then? And it shows me an instant, immediate credit improvement score.
Hmm.
And now I can guide my clients and my customers. Hey guys, let's pay this down to under 30%. Let's pay that off completely. You're at a 95% threshold. Pay that card down within the next 30 days. I had two clients that just put an offer in for a house over in Connecticut. I With this tool, I helped her and her fiance within not even 30 days. It was probably about 28, maybe just under a month. Their credit score jumped 37 and 38 points.
Wow.
They went from a 650 to a 687, 688 between the two of them, just by paying off some of the debt and using this tool. So what I would do is I would go back to this tool uh, and um, guide them on what
Right.
to pay off to get that score above 680.
Wow. So you really just kind of like guiding people through the process, not just like they fill out the paperwork and you go, well, you're not approved or you're not approved.
Exactly.
Yeah.
It's not like that. Like, look, I can get, you know, can I do below 680? Yes, I can. I would have to do an FHA loan. Unfortunately, for that particular scenario that I was working on, I had to get their credit above 680 because an FHA loan was not feasible for this particular scenario.
Hmm.
Otherwise, if it was, I would have just said, let's go FHA and no problem. However, there are certain, look, every loan is different, every scenario is different, every client is different. So I can't, for what I've done with this person over here, I may not necessarily able to do with this person over here.
Mm. Got you.
So
Got you. Because
I have
every
the
scenario
tools.
is different.
Every scenario is different, but I have the tools and I can give you pointers. They even let me print out step-by-step directions to you do this, your score is going to go like this in 30 days. I can project an immediate credit improvement, a 30-day credit improvement, a 45-day credit improvement, a 60-day credit improvement. This is what it'll be. But the tools have not failed me yet, and the fact that I've seen that, and I was just introduced to this like within the past month and a half. So the
Mhm.
first time using it, I feel very comfortable, especially when I see a 38 point improvement in less than 30 days. That's
Right.
huge. That's
That's
huge.
huge.
That's
That is
huge.
huge. You
I
know?
know everybody's anxious when they want to buy a house.
Mhm.
Everybody is anxious, but what's going to happen is you're going to make mistakes, or the deal's not going to go through if you don't take your time and you don't plan accordingly. And that's the best advice is I can be patient. Everything will fall into place. Listen to your attorney, listen to your loan officer. We are here to help you. I am here to help you. I want to see you get that home. I want to see them get that home. Nothing else in the world gives me more just satisfaction than finding somebody a home for their family, a first-time home buyer, or a simple refinance where they're saving hundreds of dollars every month. I love doing what I do, and this is why I do it.
Well, yeah, that's great, man. Everybody that's watching, this is Ricky Ciuzio. This is our senior loan officer. You need to give him a call. The phone number is on the banner below. So, Ricky, listen, man.
That's not my main picture, by the way, even though I could be as good looking as Karen.
Ah, that's so true, right? But I thank you everyone for watching. Ricky, I
Thank you.
appreciate you taking the time to share this
My
information.
ple- my pleasure.
And we will be seeing Frank at around 1 o'clock
1 o'clock.
today.
Yep.
So look forward to that, and take care, everybody. Bye-bye.
Thank you.